This is what to look at. As you can see, this candle here represents a daily candle. Another one here also represents a daily candle. So this is one day, this is one day. Because this strategy, you are going to be using a daily candle to analyze it. So this is a bearish candle, and this very one is a bullish candle that engulfed this one, which shows that the market will is still bullish, still going to be bullish. So for our entry, for our entry, we will wait for the market to come back to this zone. It has to come back to here. We have to mark here. This is what we are interested on. This here, this. We wait for it to come inside of that, or it has to come below. It has to come below the close or the open of the candle, because the bearish candle will open right here. Bearish candle opens right here. This is the lowest, this is the high it went to, and it closes below here, and this is the lowest point it gone to. So the bearish candle will open from the up and it will close below, while a bullish candle will open below and it closes at the top. So the bullish candle open at this point, it went to this, it went lower till this point, and it went higher at this point, and it closes at this point. So what we are, the two difference here is the bearish candle opens from the top, it closes below, while the bullish candle opens below and it closes at the top. So now we've seen that the market is bullish because here is our bullish candle. So what we are looking at now is for us to, once we mark the week, so we'll go to our smaller time frame. We'll go to our smaller time frame, and smaller time frame like M5 or M15. We'll be waiting for the market to come inside this zone. It has to come inside this zone and give us something like this, and retesting this, and it goes up. So this is what we are looking at on our smaller time frame, or M15. It may be M15 or M5. So this is the entry pattern we are looking at, and this point now, upon retesting this level, is where we are going to pull our trigger and we take the market to the upside. So this is what we are looking at. So let's go to the main chart. Let me show you example of this. So okay, let's describe the bearish part also, so you can understand. So the bearish part of it is for us to look for something like this. Bearish part is for us to look for something like this. Wait. Bearish. The market has to be bearish. I'm not so good at drawing, but let's just try. Just try. So the bearish part, you can see the market was coming down. The market was bullish to the upside. Before we know, this candle closes below this candle, which shows that this today we are going to be looking for a bearish trend of this market. So we will mark the wick of this candle. We will mark the wick of this candle and we scale it to the nearest future. Then we will go to our smaller time frame. It may either be M15 or M5. We expect the market to pull back to this zone like this and give us a shift in market structure. Upon retesting that level, we take our trade to the downside. So this is what we are looking at, using at just a 1 day candle. Not too much analysis. This is what we are looking at the bearish trend of this very market. So let's go to the main chart. Let me show you the live example on this scenario. So guys, don't forget to subscribe to this channel, turn on notification bell if you like this kind of video. You subscribe on this channel. So this is what we are looking at. Let us go with the bearish trend right here. Let's go with the bearish trend right here. So I'm using Euro USD. You can use any forex chart. It works. Just implement what you are seeing. So right here, this very candle here, it was bullish. This candle was bullish. It was bullish. So no other candle that had closes above this candle. So now we are waiting to take a bullish trade, but we did not see a candle of that. So after everything, we found a bearish trend. The market turned to a bearish, which means that a candle closes below this candle at this point, which was this candle here. This candle here closes below it. So as the candle closes below that very candle, we mark the wick. We mark the wick. Once we mark the wick, we go to our M15. Go to M15. This is bearish. I will take you through the bullish trend. So let us go to where we marked our M15. Okay, here we are on our M15. As you can see, here was the box that I marked. Here was the wick of that candle. Here was the wick of the candle. So now it's for us to wait for the market to come into the, after breaking this line. You can see here was the line that the market closed below, and it comes back and close inside this range. If you go to your 5 minutes, you know what I'm talking about, because that will give you a better RR. So it closes inside here, it tap into this zone, and it closes bearish. It closes bearish. So what you are looking at, what you are looking at is this very particular zone here. This zone is what you are looking at. After the market breaks structure to the downside, this is where you are looking at, because you have to place your trade right here. If you go to your 5 minutes, you will see a 5 minute candle for you to close your trade, and your stop loss will come below, above that zone, and you go for your 1 to 10 or 1 to 5, depends on what you are looking at. Go to either 1 to 10 or 1 to 5 of that day. So this was your 1 to 10, and you make a massive profit using this setup. So this is it for the sell scenario. Let us look for a buy scenario. So let's go to the daily chart again, the daily candle. Note, we are using just 1 day candle to analyze and implement everything. So let us look for a bullish scenario. So right here, I'm using USD card. You can see this market was bullish, and the candles too is bullish. The candle is bullish, is going to the upside. So I'm going to mark this candle here. This candle, this day it closes bullish, and this very day it closes bullish. So the foreign day open, I'm going to mark the wick of this candle. That is the wick. So upon marking the wick, I have to go to my M15. I have to go to my M15 for me to expect a, a trade. For me to expect a trade from that zone on my M15. On my M15, I'm going to look for a shift in market structure for me to take the trade back to the upside. Or if the market structure shift doesn't happen, I can as well use an engulfing candle to take that trade to the upside. You just look for what works for you, and you stay you stay consistent with it. So you can see, so here was the zone that I marked. This zone was where I marked, and this here was a candle that come into it to retest. So let's look for our shift in market structure for us to take the trade to the upside. Okay, right here we've seen a shift in market structure in this zone. As you can see, as the market come into it, we have a shift in market structure, and this happen, you can see this happened on during Asia section. It happens during Asia section, and we are not going to take our trade right there. So we have to wait during London section is where we are going to be taking our trade. As the London open, you can see the London open right here. It pairs back up and it breached this structure with a wick. You breach it with a wick, and upon retesting this zone, you can take your trade right here. Where was the candle? Here was the bearish candle, but this very one has the biggest wick. So we scale down. You can see the market comes into it. The market comes into it and give us what we are looking at on this zone. The market comes into it and give us what we are looking at that zone. Another thing is, if Another thing is, you can place your trade right here. You expect when the London section opens, you take your trade at this zone, but it's not proper because the Asia may grab liquidity to the downside. So here is the right place for you to take your trade, and you can target 1 to 10. You can target your 1 to 10. You can target your 1 to 10 right there. So you place your trade right here at this zone. Here is the last bearish candle, but this very bullish candle right here, the wick is too much, so that's why I'm using this one, because the wick, it has the longest wick more than this bearish candle right here. So even though you are to take a trade there, you can either take your trade like that, your stop loss come beneath that candle, and you go for your 1 to 5 or your 1 to 10. So 1 to 5 is right there, and your 1 to 10 is above. You can see the market has been rally from that time. It has been rally to the upside. So this strategy is very sweet. No strategy that is not okay to use. It's just that at times when they start playing with your mindset, you think the market will not doesn't expect your trading scenario again. But this is just it. If you are watched up till this point, you try to subscribe to this channel. Do well to subscribe to the channel, turn on notification bell so that each time I drop a video, you'll be the first to get notified. As I sign out, I remain Aqua FX. Peace.